There she is. Good morning, good morning. How you guys doing today? Hope you had a good weekend. April 14th, 2025. Gonna take a look at the latest set of CFTC data, see what the banks have been up to. I finished my report and I sent it out to members over the weekend, and I found some interesting things I want to share with you guys so that you have a good understanding of what's taking place. So, as you can see on the screen, we have the snapshot of the positions that the banks have been holding as of April 8th. All right, there you have it. And so as I like to do, I like to take a look at the change column. I want to see what has transpired over the last couple weeks. So what has happened with the last set of data, comparing it to the previous set of data. I want to see what kind of shifts in positions have taken place. Now, this just gives me a look into what has transpired recently, but to see what has been building up, we have to look at the historical data and compare each week's data with each other, okay? So first thing I see when I look at the data is gold, okay? Look at gold's positioning, minus 70,000. That's pretty aggressive. Weak, very weak, minus 70. We also have oil, minus 50. We also have S&P 500 with minus 55,000. So those are the big ones. We also have US dollar Japanese yen here, minus 48. Okay, it's up there as well. Those are the big movers that I see when I look at the snapshot. Okay, those are the big movers. So let's get into gold. What do we see? Now, I've been telling you that the banks were going to take profits on their long positions. Okay. And what's very interesting, very, very interesting, not surprising, but interesting, and something that you guys should recognize, is that when you look at what took place here at the highs, right there, and what the banks did, what you'll come to understand is that when Trump announced that there was going to be global tariffs, this was seen as negative for the US dollar and positive for gold. So a lot of traders came in, a lot of investors came in, and they bought gold. And this is exactly when the banks offloaded their positions to them. Okay, they had 327,000, and they dropped it down to 269,000. Okay, what is that's about what, 60,000, 59,000, 58,000. That's a lot. So much so that it was able to bring positions down into more neutral. Okay, if you take a look at the coloration, this is something that I've been pointing out to members. If you look at the coloration of the cells back here, you can see that they were bullish. Okay, all throughout here, bullish. But what's been happening ever since? Bullish to neutral. Okay, so when we look at the big positions held by the large institutions, the ones that are trading in the same direction as us, we can see that their bias is, or the sentiment that they're holding is switching from bullish to neutral. So not very good. If you're looking at holding a long position on gold, you got to be very careful because the sentiment's shifting here from bullish to neutral. Okay? Important to recognize. Oil, what's happening here? Well, let's look at short positions, increasing. Okay, over the last few weeks, they've been increasing their shorts. And what do we see taking place? Got a big drop in price. Okay, so much so that it broke through uh, a institutional area of demand here on the weekly time frame. All right, look at the coloration of the cells. What do you see? Bearish. Okay, was a little bit neutral back here, a little bit bullish. Now we're starting to see the sentiment turning bearish. All right, something to recognize if you trade oil. Now let's go over to the US dollar. We saw that big drop in price um, after the initial rally up from the announcement, because afterwards there was an announcement that Trump was going to put a hold on the tariffs. Of course, this is after the markets dropped significantly. Okay, the S&P dropped significantly, NASDAQ, right into institutional demand, where the banks came in and bought after they had a few days to accumulate positions. That's when Trump reversed his direction with tariffs. So quite interesting. So we see weakness on the dollar index, penetrated quickly through an institutional area of demand down here. Bullishness has been dropping for some time here. As you can see, they were a little bit aggressive here in February, but that's been slowly being reduced. And bearishness is starting to kick in a little bit more here. Okay, for the last 4 weeks. Somewhat sustainable 4 weeks. That's pretty good. Are we going to get a continued push to the downside over time? Hard to say. I think the chances are pretty decent that that's what's going to happen. But for this move to the downside to be sustainable, they have to start building on shorts. It's not going to drop without them building on shorts. Then again, we've seen a little bit of a disconnect between the CFTC data and positioning and the technicals with the US dollar. So let's move on and see if we get anything clear on the other assets. Aussie. They were pretty aggressive with short positions. And so they dropped price, then they used this drop. They closed shorts at the lows, reducing them from 105 down to 802 and then 91,000. Price eventually rallied right back up from those lows, not from an accumulation of long positions, that's for sure. Okay, but that's from aggressive short covering. Look at longs. Since December 17, they haven't been focusing on longs. Okay, it's mostly shorts. So the first thing I will drop to you right now is that the banks are profit taking on positions, which is fueling the move to the upside. Okay, profit taking, fueling a move to the upside. Now let's go over, take a look at US CAD. Nice drop we got, right? Yeah. But take a look at short positions. What color do you see there in the cells? Blue. You know what that means? They're very cooled off. Short positions are cooled off. This move to the downside is not happening because they are increasing shorts. It's happening because they're decreasing longs. Okay, you see that? 165, now we're at 135. This is profit taking on long positions. Okay. Now, this is something that we've been talking about for quite some time. If we take a look at maximum size on longs, they were 219,000. And we kind of got close there a few times at these highs. So, as I've mentioned before, when banks reach maximum size, there's not much more for them to do than to take profits on those positions, and that will eventually fuel a move in the opposite direction. So yes, we're getting a move to the downside. The thing is, it's not being fueled by an accumulation of short positions. So it could be a little bit tricky to determine exactly the path that price is going to take. Because if the banks were accumulating a short position, then we would be able to spot them coming in with supply, and they would reverse price into supply zones to continue to move to the downside. But when they're profit taking on long positions, it's a completely different dynamic that's presented on the charts. So am I bearish US CAD? Yeah, definitely bearish US CAD because of what we're seeing on the charts. But I'll be waiting for a proper short signal if I'm going to be looking to enter into a short trade. There could be some really good opportunities on the lower time frame charts, but we'll wait until it's a high probability. US Swiss. Okay. You see the big move to the downside? Okay. But look at short positions. Again, same theme here. Aussie profit taking on positions making the move. US CAD profit taking on positions making the move. US Swiss profit taking on positions making the move. So you got to be careful with these moves, guys. That's the point I'm trying to get across to you. Here's an interesting thing. So look at the direction that price is moving in, okay? It's clearly upwards. Now, what I want you to pay attention to is take a look at short positions. Banks were short. Very aggressively short. Remember that? We pointed that out before. We have the cloud here showing you, okay? This is when they were aggressively short, and them being aggressively short caused price to drop. Look what happened between March 11 and March 18. You know what happened there? That was contracts expiring. Okay, contracts expired. And one thing I've been sharing with you guys is that when contracts expire, it's usually when the banks use that opportunity to make a dramatic shift in their positioning. Now, this is several days before Trump's announcement on the tariffs. So Trump makes his announcement on the tariffs. The banks, several days before, exit out of their short positions and start accumulating along. Several days before. So remember, the tariffs were seen as negative for the US dollar, so it would be seen as positive for the euro. Several days before Trump makes his announcement, the banks significantly shift their positioning, where they use contract expirations to exit shorts at the time 175,000 down to 129,000, just like that, within a week. At the same time, since the beginning of January, they've been slowly accumulating a long position in euro. So how interesting is that? Just thought that was interesting. Thought I'd share that with you guys. Pound US dollar. We got a significant move here because we've been watching this area of supply. We saw the initial push to the upside, but price came back down. Now we're getting a break of that supply. So this is good. It's giving us a signal that we could see price continue to the upside. US dollar, Japanese yen, pushed to the downside. This one is being pushed to the downside because of an accumulation of shorts. This is different than what we see with the US CAD and what we're seeing with the US Swiss. Okay, this one's actually dropping because the banks are increasing short positions. But take a look at the short positions here. Maximum size 183. We're at 175. Okay, 183, 175. So my question is, how much further is price going to go? I mean, are they going to just surpass the previous all-time max of 183 and push price even lower? It's possible. But the more this drops, the more likely that a rally is going to be coming in, okay? Because at some point they have to close off those short positions for profit taking. And when they do, that's going to fuel a move to the upside. All right, so keep that in mind. Lastly, the Kiwi. And we've been talking about how they reached maximum size. Well, they created a new maximum size back here on March 4th. And that was all taking place while price was contacting this area of demand. And I wrote in the usual report, expect to see a reversal of price to the upside at some point, because when they start taking profits on their short positions, it's going to fuel a move to the upside. So this is what we're getting now. So US CAD, US Swiss, Aussie, New Zealand, all currencies that are moving because of profit taking. Okay? So just keep that in mind as you trade these currencies, or as you do your analysis on these currencies, that these moves, they could be tricky. Timing these moves, we got to pay attention to the US Japanese yen reaching maximum size. The further it drops, the more likely it's going to reverse. So timing entries on some of these pairs might be a little bit tricky, but I think there's some decent opportunities on the lower time frames. You just got to manage those stop losses pretty closely, because you don't want to be holding positions for too long when they're in the middle of profit taking. When they're accumulating, different story, but profit taking, not too good. Let me see some of the comments here. Good morning. Good morning. How's gold going? Still dropping? It was dropping this morning a little bit. Yeah. Notice how COT reports are always lagging and you can't count on them. Gold is going up due to tariffs and treasuries yields, and U.S. dropping further to 90. Igor's a little bit skeptical. Well, I get a lot of people saying that it's lagging. Obviously, it's lagging. Obviously, there's a delay. Okay, the data is reported on Tuesday. We get it on Friday. Obviously, we know that very well, but it's still extremely useful in looking at what the banks are doing with their positions. Okay, the banks take multiple weeks to accumulate a position, as you can see with the Euro US dollar very clearly. Okay, I'm primarily a swing trader, so this information is extremely useful for me. A lot of times when we look at the charts don't have trends, they don't have demand or supply zones, major demand or supply zones in play. So it can be very difficult to tell what direction price is going to move in. But when we look and combine the CFTC data with the supply and demand, it will give us a lot more insight into what is taking place, and vice versa. Sometimes the charts are very clear, but you look at the CFTC data and they're in a transition mode from offloading significant shorts to maybe going into neutral territory. So the most highest probability trades are when the technicals are there, beautiful setups, and you also have the CFTC data correlating that information with a clear accumulation of a position in some direction. So yeah, nice to hear from you. All right, no other comments that are... But let me see. Igor's got a lot to say. Currency pairs is majority by, for example, because you are. So how can it be useful? Oh, Igor, come on, Igor, stop acting like that. You need to understand how we do what we do, my friends. Stop being so negative. We don't need negativity like you in here chatting. If you don't understand, ask a respectful question. I'll be more than happy to help you out. I'll be more than happy to guide you to some of the hundreds of videos that I've done. Okay, I've been doing this for years. I've been showing people for years how powerful following the CFTC data is. I've been showing people for years how accurately our analysis has been and is when we combine the CFTC data with the supply and demand. So If you're just new and you're just coming in here and you're skeptical because you've seen a lot of nonsense out there, that's fine. But, you know, give us the respect that we deserve. Don't treat us like we're a bunch of scam artists, okay? Because that's not what we are, and it's not appreciated being spoken to in that manner. Come back when you have a little bit more respect, and I'll be more than happy to help you. All right, with that said, we got a big class coming up in half an hour. The Bank Secrets Masterclass. Beautiful. I love it. Gonna be big. I'd love to see you guys there. It'd be really nice to see you. If you are thinking about joining, if you want to learn how we do the supply and demand analysis, one of the most powerful things we have is the Sherlock system. It incorporates an analysis process, forecasting, and a trade signal system. So if you want to learn the system, the best way to do it is to join the school. Focus your attention on level 1, learn what you need, then level 2, then level 3. Eventually, you'll be finding trades the way that you should be, alongside the big money. Trading alongside them, you'll see results, very good results, and very consistent results, as I have been showing you throughout the years. Okay, folks, that's about it for me, and I will let you go. You take care. Have a good one. Arrivederci. All the students, I'll be seeing you soon inside class. I'm going to go have a quick bite to eat before I jump into class. All right. Take care, everybody. Nice seeing you. Have a good one.